Ron, I am telling you, we have to do something to fix this. We just had the opportunity to purchase my uncle's house when he went into assisted living, and I could have fixed that house up and flipped it for a huge profit in just a month or two. And I could have probably made a quick and easy $50,000, but I just didn't have access to the cash and paying all of those taxes and penalties in order to get that money out of my 401k. It was just too steep. That is what one of my clients just recently told me, having to pass up an opportunity because they didn't have enough liquidity. So let's talk about that today. Let's give you the lowdown on liquidity. Liquidity is the ability, or it refers to how long and at what cost it takes to turn an investment into cash. The bills in your wallet, that cash, perfectly liquid, for example. Now, let's suppose that you bought a handful of stocks. Although you may not be able to sell those stocks on Sunday morning before church, you can sell most stocks pretty quickly and pretty easily during normal business hours, especially with the advent of do-it-yourself investing apps or platforms like Robinhood and E-Trade. Now, if you hold those stocks, bonds, and mutual funds within your retirement plans, like a 401k, like an IRA, or like a Roth IRA, your liquidity position decreases dramatically. With a 401k, any withdrawals are subject to ordinary income tax. And if you're under 59 and a half years old, those withdrawals are also going to be subject to a 10% IRS penalty. Sometimes you can borrow against your 401k, but that has a variety of its own restrictions and challenges as well. Real estate, generally speaking, much less liquid than even stocks. Preparing a property for a sale, that takes time. And if you want to find a buyer that's willing to pay fair market value for the house, it could take weeks or months. I guess I should say during normal operating environments, notwithstanding the current environment that we're in right now, where sometimes it only takes a day. But with that said, real estate, generally speaking, it takes some time and repairs can be costly. There's agents' commissions, there's closing costs, all of those things. That can approach 8 to 10% of a property's value. So not only is a property illiquid, but there's also a lot of costs involved as well. A privately run small business, that's among the least liquid of the good growth investments that you can make. Selling a business typically takes months or maybe years, generally much longer than selling a piece of real estate. So having liquidity, AKA having access to cash or having access to capital, this can protect your other investments in times of trouble. I usually recommend keeping cash in a high yield savings account or some kind of money market, enough cash to be able to cover at least 3 to 6 months of expenses, as far as like an emergency fund. What that can do is it can potentially keep you from being forced into racking up high interest credit card debt or selling one of the investments that you intend to hold for the long term. For many, many people, I also recommend holding cash value life insurance as part of your financial plan. Because in addition to the insurance protection for your family, these policies build equity that you can access tax-free at any time and for any reason, without a lengthy application process, without a credit check, without income documentation, or without job verification. The cash value typically grows between 4 to 6% over the long term, after the cost of insurance, like net of any cost, much higher that you're going to receive in any kind of bank account or money market. So this is called private equity banking or infinite banking. Using infinite banking with an insurance contract is somewhat similar to a home equity line of credit, but you'll have much more control over the ability to access your capital, as well as the repayment terms. And of course, the speed at which you can access your cash. In short, having these programs, short-term savings account and cash value life insurance, having these programs as part of your financial plan, both for an emergency fund, but also as an opportunity fund, so you can quickly jump on and take advantage of any opportunities that present themselves, whether it's an opportunity to buy or expand a business, an opportunity to purchase real estate, or an opportunity to buy more stocks after a dip or a market correction, this can be a huge advantage to your financial plan. In addition, the access in a life insurance policy, the guaranteed contractual access within the policy can also be key, because that way you never have to worry about having your personal line of credit shut down, as like what just happened with Wells Fargo over this past summer with their customers. So proper financial planning should have a focus on liquidity as one of its primary goals. If something bad happens and if you don't have liquidity to handle it, if you don't have access to cash, it could set you back years by having to rack up high interest credit card debt, or forcing you to liquidate one of your investments that you intended on holding for the long term. And that gets even worse if you're forced to liquidate one of your retirement accounts, paying hefty costs and taxes and penalties as well. And not to mention the years of regret of having to pass on an opportunity simply because you didn't prepare properly and you didn't have access to capital to take advantage of that opportunity.